Hello folks, welcome back. So in this video, I am going to show you the algorithmic price run. Before that, I'm gonna ask you forgiveness because of my voice. I don't know how the voice will be work over here, but if the voice is really so bad, I'm extremely sorry for that. At the same time, I'm asking the beginners to stay away from this video because you will understand nothing, I believe. So if you are with me for so long now, watch this video, otherwise just skip this video. Here I would love to show you a London session only, okay, around that area. This is Nasdaq 15-minute chart. I'm gonna show you this price action from Wednesday. Here you can see market has taken the buy side liquidity. In Tuesday, market reached until that 15-minute last fair gap. At the same time, see this low and that low, then finally this low. What is that called? Strongest liquidity. The strongest liquidity has taken over here by shallow run. See, the body is closed at the level of the liquidity and the wick went lower. I called this the shallow run. If I see this type of shallow run, I mark the low as my liquidity. So over here, this is my obvious liquidity. This London session from 2 a.m. to 5 a.m. So I'm gonna just explain the price action over here, because if I continue the New York session, it's gonna be 2 to 3 hours video. I don't want to do that. Keep that in your mind from your 15-minute chart that market has reached until the last fair value gap. At the same time, you have the obvious liquidity. So for example, or for the sake of this video, think that you know market is going to fall. Though you don't need that, still you can think that market is falling. This is the London session. I'm just not going to mark this fair value gap from 15-minute chart, but inside the London session you can see market reach until the last fair value gap. I don't want to mark it because I already have a lot of fair value gaps. You will see that. Let's go to 5-minute chart. Now you can ask me, brother, you told us that you don't like 5-minute chart. Why you are showing us this 5-minute chart? I'm showing you the 5-minute chart. The reason is I will go to the second chart at the end of this video. So I need the 5-minute fair value gap. Okay. So this is that 15-minute last fair value gap. Remember, market reached until that area. Now look at this area. Okay. This is the low, that is the high. This is the lowest low because this is my sell side liquidity. That is the highest high. This high has traded the last fair value gap. Then market started to fall. How it has started to fall? Last fair value gap, trade the last fair value gap. Bodies didn't close above this fair value gap. Why it reached until that area? Because of this order block and the inversion fair value gap over here. Do you want to mark them? Let me show you. Here, this is the inversion fair value gap and that area. Just look at the inversion fair value gap and that area. See, just let me show you. Remove this one. Look at the bodies. Where did it close? At the consequent crossment of that inversion fair value gap. This is called the precision or the perfect price action. Okay. Now I am not interested to mark that inversion fair value gap. Instead of that, I would love to keep this 15-minute last fair value gap. 5-minute last fair value gap. Okay. So here, this is the 5-minute last fair value gap, and you can see this last fair value gap hold the price, send it back. How it is falling? Very nice. When it is falling like that way, here is your last fair value gap. This is your entry fair value gap to that specific leg. So the last fair value gap and the entry fair value gap, both of them are very, very, very important. Okay. Here, this leg went much more lower. What it has done? This low, that low, shallow run. From 5-minute chart, look, it has taken the liquidity, right? From 5-minute chart, when it has taken the liquidity, I'm going to mark this fair value gap. That run has taken the liquidity, then it go back again from the first fair value gap. So I just mark that fair value gap. Later I will remove this one, but for now remember why I have marked this fair value gap. you know market is falling for this sell side liquidity. At the same time, the last leg which has taken the obvious or some kind of liquidity and made this type of first parallel gap went through this parallel gap. This parallel gap is extremely important. It's very important. Okay, that is why I have marked this one. Later I will remove this one. Just keep that in your mind. This parallel gap is extremely important. Okay? Then market fall again. What is this parallel gap? To that specific leg, do you see any other parallel gap? No, I have only this parallel gap. So I marked that one. Where price reached until this parallel gap, fall again. Went through this last parallel gap, right? It went through this last parallel gap. That means I didn't get any respect from this parallel gap. When I didn't get any respect from this parallel gap, market went lower. How far it went? To this inversion or the first parallel gap. See how beautifully it tapped over that area. Now, here's the part, it's very important. Keep that in your mind. If you see, it has been reversed from the top of the first parallel gap. Okay, how it reversed? Look, it reversed from the top. So when you will see it reversed from the top, simply you will think market will go back again until at least the constant crossment. Now market later went through this parallel gap because we have the sell side liquidity, but at least it will reach until the constant crossment. It went through this one, go back again. Where did it go? To that constant crossment. Can you see something very similar from here? See, this is the last parallel gap which turns into the inversion parallel gap. Remember the constant encroachment rejection? Here, same thing, constant encroachment rejection. What are we doing here? We are just reading the price. We have nothing to do around that area. Why? It is outside of the session. Market went lower. Where did it go? To this constant encroachment. Now you can say, brother, it went little lower. I agree with you. Mark the last parallel gap to your chart. I'm going to, okay, just let me remove this parallel gap and let mark the last parallel gap from that area. Okay, so where did it reach? Constant encroachment. First it tapped to the high, then it went to the constant encroachment. After reaching the constant encroachment, it started to go higher. How far it can go? We are already in the session now. When market is going higher, are you going to take buy? No, you are not going to take buy. Why? Because from 15 minute chart, you know that this is your obvious liquidity. As per your narrative, you know market is going to fall. If you don't know about the narrative, no worries. You have the sell side liquidity. Do you have any buy side liquidity? You don't have. You have only sell side liquidity. So you know that market is going to take that sell side liquidity. Same time, market is going higher. So how far it can go? Until the last parallel gap or the entry parallel gap. This is the entry parallel gap. I have just marked the entry parallel gap. Market reached until the entry parallel gap. Look at the reaction from the constant encroachment. Nobody closed above the constant encroachment. It is extremely important, guys. Nobody closed above the constant encroachment. Extremely important. Nobody closed above the constant encroachment. Very important. Here, it closed above the constant encroachment, right? Look at this inversion parallel gap. You need to mark the inversion parallel gap over there. That is extremely important over here. In this type of situation where you get confused, is this parallel gap going to hold the price or not? Because market closed above the constant encroachment 2, 2, 3, 4, 5 times, right? In that type of situation, if you have the inversion parallel gap, mark the inversion parallel gap and look or compare both of this parallel gap. Let me clear this part one more time. Okay, so here when you see market is working with the upper portion of this parallel gap, you will get confused. Is market would love to go a little higher one more time? So when you will get confusion, mark the inversion parallel gap and compare these two parallel gap. Why it reached until that area? To show you that this inversion parallel gap is working perfectly around that area. Just look. Even the wicks didn't close above the inversion parallel gap, bodies didn't close above the constant encroachment. Okay, so that was the reason for trading this parallel gap perfectly over there. That is the reason market reached until the high of this fair value gap. The reason is inversion fair value gap. Here, this is the reason. Then market worked with the lower part, worked with the lower part, worked with the lower part, work with the lower part. This is the last fair value gap as well. Finally, market reached until the lower part of the last fair value gap, and then boom. So until now, what did you get? Price reached until the 15-minute last fair value gap, then it started to fall. This bullish fair value gap, that bullish fair value gap. Both of them are important because market can stop over there and it can go back higher again. It is outside of the session, so we are not worried about anything. Finally, market reached through the entry fair value gap, come back again to the constant encroachment, didn't close above the constant encroachment. This is the sign market is bearish. If it could close above the constant encroachment, that wasn't a sign for the bearishness. Where is the part of the fair value gap holding the price? Full fair value gap, if it hold the price, it's good. But if you need more confirmation, then you have to work with the constant encroachment. You have to work with the constant encroachment. Okay, make it clear. At the same time, one fair value gap is divided by 4 portion. Okay, so let me mark it at least until there and normal. Okay, so let me put it over there. Look, the body closed at the 50% of that fair value gap. Wick reached until the 75% upper quadrant. Let me mark this one as well. Lower quadrant, 25%, that is, I'm sorry because I just marked it in opposite way, so that is actually 25%, 50%, 75%, 0%. Where did it reach? To the 75%, but not tick by tick. Yeah, I understand, it went little higher, but doesn't matter. No. Now let's see over here what it has done. That low and that high, brother, it reached more than 25%, right? 75%. It went little higher. I agree with you, but still the constant encroachment holding the price. Let's see this one, final one. Okay, so that is the low, that is the high. Same lower quadrant, it reached until the lower quadrant. Bodies are important. After reaching this fair value gap for the last time, market fall, boom, took that sell side liquidity. Remember from that 15-minute chart, that sell side liquidity has taken. Now I am going to 1-minute chart. It's gonna be little difficult now, trust me, but if you can stay with me little more time, it will be much more easier for you. It will be very, very easy for you. Okay, now over here, this is that first 5-minute fair value gap. Remember the inversion fair value gap and the first 5-minute fair value gap. Now I'm going to remove this inversion fair value gap. Instead of that, I'm gonna keep this 1-minute last fair value gap, and this is the 5-minute fair value gap, right? Market reached until the 1-minute last fair value gap to the constant encroachment. It reached until that area, then it fall. When it came here around that area, okay, this is that second 5-minute fair value gap. Over there, this is the only fair value gap or the last fair value gap inside that 5-minute fair value gap. This is that 1-minute last fair value gap. Market reached until this 1-minute last fair value gap, closed the fair value gap perfectly, then fall. I'm going to remove this one. Okay, why this fair value gap, brother? Because this is the last fair value gap to that specific leg inside this 5-minute fair value gap. I'm not gonna mark this fair value gap. I'm just gonna use this 1-minute fair value gap because this fair value gap is inside this 5-minute fair value gap. What you are doing here, it is outside of the session, so you don't need to worry about anything around that area. You are just watching the price. Okay, you have nothing to do. Price reached until that 1-minute last fair value gap, went lower, make lot of consolidation, then fall again. This is that inversion fair value gap. Remember the 5-minute inversion fair value gap reached until that constant crossment. And the week, see this week, where did it reach? 1-minute last fair value gap. This is your 1-minute last fair value gap. What do you have more over there? In that inversion fair value gap from 5-minute chart, this is your 1-minute last fair value gap. This is the highest 1-minute last fair value gap. I just marked that 1-minute inversion last fair value gap inside that 5-minute inversion fair value gap, where the price reached exactly to the low of that 1-minute inversion fair value gap. 1-minute last fair value gap, 1-minute inversion fair value gap, 5-minute inversion fair value gap, constant crossment. Are you going to take entry over there? Absolutely not. Market went one more time lower. Okay, so it reached until here. What is that? That is 5-minute last fair value gap. Remember, that is 5-minute last fair value gap. But here, this is my 1-minute last fair value gap. Why this 1-minute last fair value gap? Because this low has taken all of this liquidity, and this is the lowest low. If it is broken, market has nothing that can stop the price to take this liquidity, 15-minute liquidity. That is the reason for marking that 1-minute last fair value gap. I'm going to remove this one and gonna keep this one. Now, when I mark the upper quadrant or something like that, okay, you can say, why brother it went little higher of that upper quadrant, 75%? Because market reached until that 1-minute last fair value gap inside that 5-minute last fair value gap. That was the reason market reached until that area. It went through the upper quadrant. I'm gonna remove this one and look over here. 1-minute last fair value gap inside that 5-minute last fair value gap. Now, here you are already in the market. In the session. Market reached until that area to the 50% of that 5-minute last fair value gap. Made it relatively equal lows around that area. So this low and that low, they are relatively equal lows, and the obvious liquidity, whatever you say, mark the low. You have this 1-minute liquidity now. Below this 1-minute liquidity, you have this 15-minute liquidity. You have this 1-minute liquidity. Market went through this fair value gap. Now, why I have marked this fair value gap? Why this fair value gap is important? Because look at this run. Okay, this run, what happened? Why this run is important? Now, from 1-minute chart, look this low and that low. What do you see? Relatively equal lows. A very clean sell-side liquidity. Market has taken the sell-side liquidity by this run. So this is the last or first fair value gap that is gonna be important for me. I marked this one extend it to my right. This is 5-minute last fair value gap. Inside the 5-minute last fair value gap, I have 1-minute fair value gap over here. See this two red line, this is the 1-minute last fair value gap. What else do I have? 1-minute first inversion fair value gap. It went through this inversion fair value gap. Are you going to take buy? No. Why? Because you have the sell side liquidity around that area. So you should look for sell only. You are not going to look for buy. It went through this 1-minute last fair value gap. Remember, I have marked the same kind of fair value gap from 5-minute chart, which I have used around that area. Let me show you one more time so you will understand. So this is 5-minute chart, and look over here. See this one. Why I have marked that on? Because this run has taken the liquidity. All of this relatively equal lows has taken by that run. When I saw this, I just marked this low because this is the last low, or last fair value gap, which is going to be used as an inversion fair value gap. Do you understand? This is the part where it is very important. At the same time, you can mark this first fair value gap, and that is going to work the same way. I'm gonna show you this one so that you will understand the 1-minute one. Market went through this fair value gap, come back again to the constant crossment. When it went through this one and it rejected from the constant encroachment for the sell side liquidity, you are okay because you have the sell side liquidity. But if it went through this parallel gap, come back again to the constant encroachment, are you going to take buy? No, you are not going to take buy. You will just let it go, and you will wait when market will come back again below this parallel gap, and then the constant encroachment will hold the price. Same thing over here in 1 minute chart. This run has taken clean liquidity, very clean liquidity from 1 minute chart. So this is that first parallel gap or the last parallel gap, whatever you say. You should wait to see how far it can reach. Here, this 5 minute parallel gap, or there is a 15-minute parallel gap. Remember at the beginning, I told you, frame your trade from that 15-minute last parallel gap. There was your 15-minute last parallel gap. Keep that in your mind. I mean, if you remember, inside the session, there was your 15-minute parallel gap. So you will wait to price reach until that 15-minute, either the entry parallel gap or the last parallel gap. When market has traded from the higher time frame, here is the part where you need the higher time frame. Without the higher time frame, why you can't frame your trade? Yeah, obviously you can frame your trade from your second chart. I will show you that. But here I'm gonna tell you, if you wanna frame your trade, you have to depend on that 15-minute last parallel gap or the entry parallel gap. From 1 minute chart, if you'd love to take the sell, you have to wait for price reach until the 15-minute last parallel gap. Inside that 5-minute last parallel gap, I showed you. Oh, I will need that. Okay, it reached until that 1 minute last parallel gap. At the same time, this is the 15-minute last parallel gap. Take sell from there, no problem. Why? Because you have this clean sell side liquidity over there. You are going to bleed this one. The reason is market reached until the 15-minute last parallel gap, 5-minute last parallel gap, 1 minute last parallel gap. Inside that one, okay, you missed it. So market went lower. Take this relatively equal loss, right? It has taken this relatively equal loss. Oh man, I have missed everything. Now is the time to use this inversion parallel gap. Wait to price reach, go back again until the parallel gap where it is going. 5-minute last parallel gap, 1 minute last parallel gap, and 1 minute inversion parallel gap, constant encroachment. It reached until that area, take your sell. Where should your target? Until this 1 minute last parallel gap. I missed that on as well. When you will miss everything around that area, this is the part where you will go to 30-second chart. Here is the importance of the 5-minute parallel gap. You will understand why the 5-minute parallel gap is important. And are you seeing how the price reacting in every specific level? Okay, you will show it. I mean, you will understand it, but it will take a little time. Okay, whatever. Now, here is the part. I will show you this from 15-second chart actually. So price reached around that area, traded around that area until here it reached until that 1 minute last parallel gap, fall again. You missed this. I mean, this run, maybe you missed this one, no problem. You missed also this one, that is also no problem. Here, there is your another opportunity to take sell. How? See this low here, this low has taken around that area. So this is the leg. In that leg, where is your last parallel gap? All you have to do is you have to wait until price closed below this one. When market will close below this one, go for the trade. What is going to give you the precision that you can take that entry? Because you saw market reached until the 5-minute last parallel gap. Here, remember, here you waited for 15-minute last parallel gap to take your entry from 1 minute chart. But when you are in 30-second chart, you will wait to price reach until the 5-minute last parallel gap. So where did it go? 5-minute last parallel gap. Did you get any market structure shift over there? No, I didn't get. So if you don't get any market structure shift, you missed everything. Wait for the leg which has taken liquidity. This leg has taken liquidity. When market will break this obvious, I mean the last parallel gap, take your entry. If it made any parallel gap below this parallel gap, last parallel gap, try to take your entry from that parallel gap. So over here you can see you can take and close approximately entry. I mean, it didn't tap until that area, but you can take the close approximately entry. I'm sorry, this one is not important. I didn't see this one first, whatever. It didn't tap to this parallel gap, but still you can take close approximately entry. Maybe you missed this one, no problem. What is this fair value gap? Remember from 1 minute chart? From 1 minute chart, that was the last fair value gap from 1 minute chart. Market has went through this 1 minute last fair value gap. After going through this last fair value gap, you have to take your entry from that entry fair value gap. Not entry fair value gap, I'm sorry, actually it is called the fair value gap which has built below that last fair value gap. So if market failed to make an fair value gap below this last fair value gap, you will wait to price reach until that fair value gap one more time, then you will take entry. But if market made another fair value gap below this last fair value gap, you will take the entry from that fair value gap. Where is your target? Remember, 15 minute last fair value gap, 15 minute liquidity. Maybe you can go a little lower of that of that liquidity, whatever you want. But look at the precision over here. Brother, price went higher. I can see it, price went little higher, but look at the bodies, where the bodies closed below this constant encroachment. What did you cover? Just the fair value gap. Here the best option is to cover the order block. That means if you cover this order block, if you have any order block above the last fair value gap, this last fair value gap, okay, this one, then you should cover that order block. Here I'm gonna mark the order block from 30-second chart. You can see market reached until that order block, then boom, how beautifully it fall. If you take your entry from there, boom, your trade is closed already around that area. Just 13 handle, I know, but your trade is closed over there. Now I would love to go to 15-second chart to show you something else. Well, in this 15-second chart, you are really able to take yourself from the constant encroachment, the lowest time frame for me actually. So you have to take your entry from your 15-second chart. Look over here, price reached until this constant encroachment one time, okay. When it reached around that area, it went lower and made this sell side liquidity, this low and that low. They are now sell side liquidity, right, until that area. Then market reached until one more time until the constant encroachment. See, it reached until that constant encroachment, then boom, fall until this sell side liquidity. Then market went lower, made another sell side liquidity, went higher. Why it went higher? Because it would love to trade the 15-minute last fair value gap. This is that 15-minute last fair value gap, 5-minute last fair value gap, 1-minute last fair value gap traded. Then look how beautifully market fall. Boom. In that type of situation, and that area as well, market reached higher one more time from 15-second chart, went lower, came back again to the constant encroachment from 15-second chart, boom, market went lower. But that was not my intention to show you the entry setup. Instead of that, my intention was to show you how beautifully the price react from the from some specific level, one after another. Now here, if I just mark it perfectly, I believe, okay, so here and there, okay, it went through this lower quadrant until the constant encroachment, retraced from the lower quadrant. Before that, it reached until the low of that fair value gap. So here, the fair value gap, I just didn't mark it perfectly. If you just marked it, you will see the reaction from every single level, how beautifully it reacted from there, from very lower time frame. If you go every single area, you will see the precision over there. Constant encroachment, rejection, market went lower, made this relatively equal lows from 15-second chart. See this relatively equal lows, went higher. Where did it go? Until that 1-minute last fair value gap. Then market structure shift, fair value gap, boom, fair value gap, boom, go another fair value gap around that area from your 15-second chart. Look, market has made lot of liquidity around that area. Then finally market reached until that 5-minute last fair value gap. That is the reason, that was the reason I marked the 5-minute chart actually. 5-minute fair value gap. It reached until that 5-minute fair value gap, gave you market structure shift, fair value gap, entry fair value gap or the last fair value gap, whatever you mark, trade that on, that is your sell side liquidity. Boom. Go another one, and that area, this is the last one. I mean, it reached until that area, then gave you a market structure, but it's a very messy price action over there. But this is how price actually work. It just respect every level. Okay, all I wanted to give you is the precision of the constant encroachment of a fair value gap. The constant encroachment rejection will help you to understand your bias is right or wrong. If you are bearish, then you will always expect that market is not going to work with the upper portion of the fair value gap. Instead of that, it is going to work with the lower portion of that fair value gap. If you see it is working with the lower portion of the fair value gap, you are good to go. Okay, so every single time if you see like that way, I mean, here it's 15 second chart. Let's go to 5-minute chart actually, and here. So this precision will help you to understand that your bias is right. So guys, that was all for this video. If you understand anything about how to use the constant encroachment and how the price actually tell you the precision, you will really be able to trade a lot of times in from a small market. Okay, all you have to do is you have to practice a little, and this is the first time I'm going in that much deep. Maybe it's gonna be little difficult to understand, but I hope that if you watch it 2 to 3 times, you will understand a little bit of this video. But I will try to make some more videos like this so that you will be used to with this type of price action, and it is going to be very easier for you to trade in that type of situation. Okay, so that's all for this video, and if you're new to my channel, you can subscribe to my channel. Don't forget to give me a thumbs up. Until the next video, cheers.